Hello, welcome to another video of Investing with Dan. Today we're going to talk about a retail stock that I have recently invested into. I believe it's one of the cheapest within the UK index at the very least. The company is JD Sports. It's had, as you see, it's down 3% today on the back of Fed meetings where they've said that interest rates are probably not going to fall as quickly as expected due to stickier inflation. I think this is probably a trend that might continue. They're expecting cuts in June, but if you look at the way crude prices are going, I think maybe it's a little optimistic. Anyway, onto the stock. You can see the monthly is up 8%. I think I got an average position of around 110. I bought about 114 and then about 18, something like that. So the 6-month trend had a big fall on the 3rd of January due to a sort of profit warning, and then a recent uptick by that big 20% from on the 27th of March. I think it was up 15% on the day. So year to date, it's down 20% over a 1-year period. You see there's been a big sort of downtrend. We're going up in November, where the general stock market fell was at its lowest throughout the year in 26th, 30th of October time. So on a 5-year trend, it peaked in November 21. This is when a lot of the growth stocks did peak around this time. Before obviously the war in Ukraine happened in January, February of 22, and inflation began to spike. So actually JD stock is only at 25% higher than 5 years ago. It's okay, but also 20 quite far down its pre-pandemic highs, 27% down. And this is a growth company. I'll go through the figures in a second. So I think it could be a real bargain. So just go on to Yahoo Finance. You can see part of the reason of the recent downtrend is the expected earnings per share is reducing from around 13 last year, 23, to an average estimate of 11 this year. But this is not bad. I mean, it's still that would trade at a forward PE of around 11, 12. And, the estimates are quite close to each other. We got a high estimate of 12.4 and a low estimate of 11.29. So there are, and also I'll get to in a second, there's been a recent trading update where I think it is positive. The market reacted positively on it on the headline figures that they gave. So I think this is very likely that the company will be trading within 11, 12 P this year. And then it also expected to grow probably around 10% on the earnings in 2025, which will, if you get the higher estimate, we're looking at, earnings higher than it was in 23. So with the share price down, so 23 was 22 earnings. So, the share price has fallen 30% since then. So I feel this could be a real buying opportunity. So we'll just go on to the Barron's page. So you say year to date down 23%. Small dividend yield 0.76%. So it can trade on the tracker dividend indexes and things like that. So if I go to the financials, as you can see, this is a growth company. In 2019, you got 4.7 billion, but this has grown more than doubled to 10 billion in 23. Big growth. You can see here, 29% sales growth, 38%, 18%. This is organic as well as acquisitions, which you'll see on the balance sheet in a second. There's higher intangible assets due to acquisitions. But there's a lot of organic growth, and when you get to the trading update statement, we can look at how big the company is growing. And when you look at the share count, okay, so there's was a bit of dilution in, was this 21, 22? Just scroll up. Yeah. Probably just on the back of the pandemic and wanting to expand more given the opportunity. But so that's nothing to worry for me. Then go onto the balance sheet. JD Sports is sitting on, I think, about 1.5 billion worth of net cash. So they're expanding massively all around the world. The US is now a bigger market than the UK and Ireland. They're also expanding into Europe and Asia. So yeah, look, cash balance grown massively over the last 5 years. So I'm very happy about that. Property, also increasing largely. Intangible assets, I don't necessarily like to see this growing, but because of the expansion plans they're on, recent acquisitions, a big Polish company. So, if they're buying them above their net asset value, then this is going to increase intangible assets. But I don't mind this when the company has 1.5 billion in net cash. They can afford to buy these companies, and if these companies are increasing profitability, which I believe they are, and top line revenue growth, and that's fine by me. So you see, short-term debt here is largely due to leasing. If we just go on to the long-term debt here, so you look at this. There was an accounting change about 2-3 years ago, which included, so actually probably longer than that now, 4 years ago. So where you can see here, 62 million to 1.7 billion. This is an accounting change. So if you look at here, which included leases, so long-term debt, excluding capitalized leases, actually reduced from 56 million to 15 million, even though the long-term debt went up there because there was purely leases taken into account in the new accountancy rules. So scroll down to another thing I like to look at is the total equity figure. If they're not paying a dividend or doing share buybacks, I like to see growth here. So 20% here, and then keeps growing up to 2.6 billion. Obviously, this is total equity. If you want to exclude intangible assets, then most of the time I like to do that. But I feel with how the growth trajectory of the company and the fact there's no debt on the balance sheet, then this is okay. Okay, so on the 28th of March, a full year 24 trading update was released. And this was sort of, could this be a second profit warning in the space of 2-3 months? Thankfully, it wasn't. And the Regis Schultz, I believe his name is, the CEO, said that in the full year 24 financial year, they outperformed the sportswear market as a whole, reflecting the strength of their business, and they actually have like-for-like sales growth of 4% and an organic growth of 8%. And they expect, they've opened 250 new JD stores, and they've initial guidance for next year is pre-tax profits of 980 million, which reflects the 11 to 12 estimates for earnings per share. So I think that's very good. You can see you can look at this on the JD's investing relations website. You can go through it all, see what it looks like for all the different regions. But UK sales may have fallen down a little bit, but American sales are going up, Asian Pacific going up, even the rest of Europe going up. And yeah, so all I think fairly impressive. And if you've got a company that's trading at 10, 11, 12 PE ratio with this growth rate, I think JD Sports could be, one of the bargains in the FTSE 100 at the very least. And also, I'd recommend reading through the annual report. Always read through the annual report before you buy any company. I've always got lots of good details. With US companies, they released on a quarterly basis. UK companies generally, they've provided trading updates every in between a half year and full year report. But yeah, go ahead. Please read up. There's lots of information here. Lots of it is just filler, but you can get to the real good, interesting stuff. The breakdowns between regions and where the company feels the growth is going to be strongest. So yeah, I think that's about it for this video. Please like and subscribe. This is only my second video, and I hope to release at least one a week. Thank you for watching.